Okay, so here we have micro E mini Nasdaq 100, and we'll give a top-down analysis for Friday trade execution, what I saw, what was logical targets, what was my target, what got hit, what didn't get hit, and then just kind of how I operate within that 930 window, 950, 1010 window. Kind of exiting the charts around 1030 if I don't see what I would expect to see within that time frame of price action in the morning. So here we have the daily chart. We have this suspension block. So you have this candle's close, this candle's open, and then it's a gap. There's two gaps in there. Let me zoom in. So that this candle's closed and this candle's open. It has a gap, all right? There's no bodies in there. And then this candle's closed Tuesday, February 3rd, 2026. And then this candle's open Wednesday, February 4th, 2026. There's no bodies there, so that's a gap. So you would encapsulate this entire range here, drag it out in time as a suspension block. And then you have these Fibonacci levels. All right. These are the levels. And then as we continue, those levels will be transposed down through a filter or a matrix of time interval, I guess, price actions, or time interval candles is the correct way to frame it. So normally I don't do too much on the 4 hour because I'm intraday, so I'll just drop right down to the 1 hour for my framework for the current range that we're trading in. So if you look at it, the current range that we are trading in is essentially from that high down to this low, right? It was just kind of just been banging around, referencing old highs, old lows, old fair value gaps, which is daily fair value gap, and then these intraday pockets right here for fair value gap levels. And then on the downside, you can't really see it here, but you will see a lot of fair value gaps being reached to and liquidity being drawn to. So I'm gonna drop down to the 30-minute chart. All right, cool. So, and we're only looking at Friday. So I'll put some lipstick on the chart for you. This low comes in at 702. Is that 702 even? Yep. And then it is a sell side liquidity pool. So we'll tag that on there. And then also we have this gap here that overlaps on the 30-minute chart here. And you just want to get those levels too, make sure those levels lines up. So the low of this candle, if you look up top here in trading view, if you drop your candle over the top, it'll give you the actual price points for the open, high, low, and close bar of that specific candle. So right now I'm looking for the low of this candle. The low of this candle comes in at 24,693 even. Alright, so I already know it's this one. And then the high of this candle, Tuesday, February 17th at 10:30. The high of that candle comes in at 24,603.75. Just making sure that that is visible from a downside perspective. All right, so in the morning we'll talk about it, but as you can see, stops were referred back into internal range liquidity here, and then ran out the external range liquidity from the previous day's highs, these two equal highs here. But as we filter down to a 15-minute chart, kind of get the glimpse of it, right? Previous day's highs was here, and then Wednesday high was here. Five-minute chart. Directionally correct, but it was a little sloppy, which caused me to get stopped out. Normally within these time frames, between the 930 and 950 and 1010 macro, not majority, but the runs that I desire to be in are like the one-sided price runs, where price just slice through butter higher or lower. And you'll see it's heavy displacement, it's one-sidedness, and it has a time filter to it that we won't get into it here, but I just want to show you how I'm top downing, right? And then ultimately getting to how I'm entering trades with the top down in mind and logical targets in mind. So the one thing that I would say this morning, since I had one contract on, the take profit should have been automatically below the first gradient level on that daily suspension block. So if I go back out real quick, take this off. So like I said, this gradient level, this zero level, this first gradient level, that should have been I should have layered my take profit right below that, right? And what really happened was I decided to stick to the actual model itself. So it's a 2-to-1 model, right? And for instance, for drawing purposes, I always draw me getting in at the very, very high of the fair value gap, just worst case scenario, and I know my stop is below a swing low. So that's 86 handles, right? So looking at about 170 on the upside. So I was somewhere, let's just say I was somewhere up. I was a little higher than that, but let's just say I was somewhere up here at like I think I was at like 190 or something here. But a true 2-to-1, is like 170. That's that worst case scenario. So about 170 will put you right here. Also, you see me bring out my fib, and you see me do a standard deviation of the actual range. So what I did was I took this low and the high of the range that I'm entering, and I wanted to find out where do we lay at if we were to get a standard deviation. So a standard deviation is just a -1. So you can take this -1.5 and take this 5 off. Once you take this 5 off, add a 0, and then you'll see that level populate here, right? And now that I know that this one is here, I know my take profit had to be somewhere up here somewhere. Boom. Cool. So that's what you said. You saw me frame the actual fractal for one standard deviation as a target. This up here was a 2-to-1 target, right? And then this right here is a 2-to-1 target worst case scenario. So I may have gotten in a little higher than expected, which forced my 2-to-1 to be way up here. Standard deviation is here, right? But knowing how sensitive and how fickle the markets are, especially on a Friday, and just this last 2 weeks period, right? We would want to at least put the take profit low hanging fruit objective will be just below this gradient level here, right? So just to talk about the trade, right? So we know one standard deviation is up here. You see why I framed that in my trade. Then I came back and I enter off of this fair value gap here, right? And I know the framework for fair value gaps is the stop goes below the candle that makes the fair value gap. I rarely use that whenever I have a swing low, right? So like that logic is cool if we were entering off something like this. And to be honest, this entry right here, there's nothing wrong with this entry because this entry played out. I like to have, if you look at most of my recent entries for the year 2026 and a lot of my smoothest and best case trades, you will see that a lot of my fair value gaps are coupled with swing lows. So it gives me the complete framework essentially. Like it gives me the fair value gap, which is what my eye trains to see to get in. I have lowered the risk as far as contracts that I put on to be able to have a larger stop than the actual fair value gap model calls for, and for what most retail traders don't like. They like tight stops, and I'm accustomed to, and due to back testing multiple things, but I'm accustomed to having my stop below a swing low, and then seeing price run from that area. So as you see, I was entering into this where this area is. Sorry, it's a little light. Let's turn it up a little bit. So I was entering off this fair value gap. My stop was below here, below this swing low. Right, and why is it a swing low? Because it has a candle to the left of it, that's a lower, higher low, and a candle to the right of it, that's a higher low. So this is a swing low. So this low, if price is trading higher, this should be a protected low. Right, so if this is a protected low, then if my directional bias is correct, then that low shouldn't be traded to at all. Right, so it's a protected low. That's my swings. That's what my stop loss was. Traded down. You see me buy up in here somewhere. Low here, set through a little bit of consolidation. We ran up. You see me move my stop to break even. Ultimately, I was looking for one-sidedness. So I was looking for price to just continue to reprice higher, 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 repricing back up into these gradient levels with one-sidedness, not the heaviness back and forth that we saw like these last 2 weeks. I was looking for the one-sidedness. We didn't get it, right? But logical buy side was taken, and eventually the take profit was traded to. It was just after all of this back and forth. So I'm not mad at it. It is what it is. I was pleased with the setup. I was pleased with the logic. I was pleased with the execution, because sometimes I won't pull the trigger, and that's just something that I'm just getting more accustomed to, just pulling it, having a protective stop, trusting it, and just letting it run. And managing the one contract that I do have, and it's forcing me to have low-hanging fruit objectives for targets, but I've been able to manage the conditions so far from January to February. I will say January trading was easier than February trading, but I'm excited for the weeks and the months to come. Executing my model, being consistent, because I know the market is consistent, and it will reward consistency. So thank you for tuning in. If you like more top-down trade review type videos, like, comment, and subscribe. And 2026 is going to be a great year, and I'm excited to share it with you.